All right, looks like it's time to get going. Whoop, 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 whoop. All right. Comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. What do you think of this? I know it doesn't match my shirt, but I am excited about this. You know what it is? A leisure suit. This is made out of sweatpants. I'm so excited. So I have the full suit. So I can get on an airplane and sleep in my suit. It's pajamas. Sweatpants. Sweatshirt. This is like a hoodie. Look at this thing. It's a hoodie. Yeah, how funny is that, huh? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Bank of England's Bailey indicates that interest rates are expected to decline gradually.
The Fed kept rates unchanged yesterday. How are the markets reacting to the decision?
Breaking. Bank of England keeps its rate at 4.50%. Gold burdened by profit-taking after stretching to a fresh all-time high.
Mexico private spending, year over year, climbed from previous 2.9% to 4.4% in 4Q.
EU leaders urged to back Ukraine with weapons boost. Mexico private spending, QOQ, 1.4% 4Q versus previous 1%.
United Kingdom Bank of England, MPC vote rate unchanged came in at 8, above forecasts 7.
United Kingdom Bank of England MPC vote rate hike in line with forecasts 0. BOE leaves bank rate unchanged at 4.50% as expected. All right. Oh, so my mic was off here, or is it was off here? Well, either way, it's on now. Yeah, if you didn't hear, I was all giddy and excited that my new suit just showed up. And it's made out of sweatpants. So now I have a suit. So this blazer I'm wearing fits me like a glove, tailor-made. And it's a hoodie. It's just so funny. It's a hoodie. It's so comfortable. You can literally just sleep in it like pajamas. So how funny is that? But anyway, so Bank of England keeps interest rates the same as we expected. We had it all plotted out. Swiss National Bank cut their interest rates as we expected. We had it all plotted out. There's no guesswork anymore. Yeah, because we only use the data. We have data. Yeah. So anyways, there we go. Yeah. Steady. Steady Freddy. Check this out, though. Flat, cut. Pause, cut. Pause, cut. Pause. Question mark? Hey, look, a 3 drive emerging. Yeah, whatever. Let's move. All right. And 21 minutes ago, we found out that interest rates are going to remain the same. Cool. So in this situation, sell Kiwi dollar. Okay. Or sell dollar CAD? Really? Hmm. That's strange. Well, hills bells. I don't know if I even like that. It is what it is. Cool. Yeah. No, no, no. Look at that. Got that big ball from yesterday. Aussie's in the same boat too. Uh Aussie isn't even on this radar. See, typically you wouldn't be trading Aussie and Kiwi this time of day relative to some other opportunities or assets, I should call them. Just because they'd move better in Asia than they do in the US session. You probably already know that. Maybe I skipped over it. I can't even find Aussie dollar. Really, it's that bad? I thought that because of the ASX, not a good time to trade. I must have missed it. I don't want to turn off other things. So the list, yeah, I just skipped it. I guess I missed it on the first. There it is. I missed it. Yeah, extraordinary move. Good time of day. Thursdays are all right. Notice on the Asia close, which is Thursday night, Friday morning, look at the interest in trading Aussie drops precipitously. It's good to know, isn't it? Sunday, Monday is the time to get going. And then there's lots of trading on this asset. And then by Friday morning, niet. Cool. Thank you for your vote. Inconclusive in our research. There's looks like there's a normal distribution with a slight skew towards risk on. So it's got a right fat tail, which is a measure of kurtosis. Toast. Yeah. Well, let's see how you guys line up with what I can measure. Okay. So let's see what the risk gauges suggest. On the long run, we're neutral. This was -2 yesterday. And yesterday, at the beginning of yesterday, daily and weekly were mixed. So daily changes all the time, right? Now weekly changes a lot slower because the data set's bigger. And we went from mixed to +2, which is risk on, now to +3. All right, let's take a look at how we got to this conclusion. Okay, looking at the options market, They favored calls over puts. That's good. Volatility dropped week over week. That's good. S&P 500 is up. That's good. Dollar's flat. Neither here nor there. Yen is flat. Neither here nor there. Gold is up. I score this as bad. You could score it as good. It just changes this number, but it doesn't really change the direction. Long-term treasury yields are down a little bit. No impact. Short-term yields are down a little bit more. That is good. So you could count this as a 4 if you want to give gold an edge for risk on, and maybe yields down 0.42% week over week is good to you. So you could have this as a 5 or a 6 if that's what you wanted. I mean, we have the data. At least you know this, so you can decide what your score is. This is just doing my outtake, my outlook. So in our summary of economic projections, we saw future expectations for inflation to be elevated. So you would buy gold. Oh, yeah. Well, that elevated inflation is not good news. Okay. And with a slowing GDP, which is also something we saw in the summary of economic projections, you would think aggregate demand would be down, which is also wouldn't make gold to go up. Gold going up wouldn't be aggregate demand. Gold going up would be hedging of inflation. Or at least that's how I've scored it. You can disagree with me. That's perfectly fine. As long as you're opinionated, you have to tell me why. Okay, cool. Let's go back to the Dashi. Okay, pound Aussie, very bullish. Gold, very bullish. Seasonally, it goes up, and it technically is going up. So that's right as rain. Pound dollar is up right now, but it's usually not this time of year. Euro Aussie is up right now, and it usually is up. So that's a better trade based on seasonality. There's just one less thing. The headwind is a little less. This one has 50-mile-an-hour winds blowing toward it. This has 25-mile-an-hour winds blowing toward it. Okay. Euro dollar, okay, favorable score to the upside. That's usually not what's happening, but it is happening. So once again, a little more headwind, a little more pushback. Mm-hmm, mm-hmm. Aussie yen down. Okay. Aussie kiwi down. So maybe Aussie, but it's not actually doing it right now. Kiwi yen down. It's not actually doing it. USD Swiss franc bearish, but I don't know if I want that either. But look, that is what's happening. Interesting. But it usually goes up, but it's falling. All right, this side's a little more complicated. You should be able to hear me. Yeah. I'm assuming sound is coming across correctly. It's showing me that it is. please confirm that we have sound. Yeah. Yeah, I thought so. Thank you. Yeah, sound is great. You like the new microphone? It's better, isn't it? I really wanted quality sound. Yeah. Okay. Good. So, as expected, interest rates stayed the same. And all the news is CAD related tomorrow. Not a lot has changed since earlier this morning. That's good news. That's good. 2 years below 4.0. That's good. Absolutely fine. Relatively moderate. See what's working. Oh, yeah, we have the swing trading group tonight. Is everybody going to attend that? It starts at 4. I can go a maximum of an hour and a half. So we should be done no later than 5:30 because I have to go and I'm doing my fire suppression test, then completing my hazmat, and then starting search and rescue for the Department of Homeland Security and FEMA. It's part of my superhero training. I got to get out of here no later than 5:30, so that's good. That means I have to keep the jokes to a minimum. Bitcoin, biggest winner. USD Rand, the biggest loser. That's good. Treasuries have come down. That's good. Aussie's weak, Aussie's weak, Aussie's weak, Aussie's weak, Aussie's weak. Huh. Well, hell's bells. Russell's up, Nikkei's up, Nazi's up, gold is up, DAX is up, FTSE's up, Dow is up, S&P 500's up, oil's up. Holy smokes. So if you're going to analyze using this is risk on. And in a way, that's what the risk gauge is telling us on the longer term. That we were negative, but now we're moving more positive. So this is week over week. This is really telling you, like, are you missing something? Yeah, well, if you're not selling Aussie or buying the stock market, you're doing something different than everybody else. And what we're trying to figure out is what everyone else is doing so you can go ahead and trade with them, not against them. So, yeah, speaking about swing trading, it will be here. Make sure you tell me you're going, and you'll get the email reminder. You can also add it to your calendar. How nice is that, huh? So I'll see you there. I'll be there for you. These 5 trades I'll share with you. All right. So we already did this. Let's clear this slate. Leave all that on. Let's look at the stock markets. Okay, short term, FTSE down, or let's say, yeah, this is a bearish opportunity. This is a bullish threat. This is a bullish threat for Dow. Bullish threat for S&P 500. Could be an interesting buy here. NASDAQ on the hourly chart is consolidating, but a drop to this lower level could lead to the apex. Dow on the hourly is bullish. This was a threat, so that could be an opportunity to buy around 41.70.21. 41721. FTSE bullish with the threat. You got to be careful there. NASDAQ bullish with an opportunity, and this is on the 4-hour. So if that 1 hour holds, that could be one of these things. Huh? Could be good. Could be good. Particularly after a day of after a Fed day, all of a sudden you're getting bullishness. Okay, that carries weight, doesn't it? ASX up to 8, down to 79 maybe, and then up beyond. Oh, that could be interesting longer term. Dow on the 4-hour is consolidating, but if it breaks, then you buy a dip. FTSE on the daily chart is bullish with an opportunity. Yeah. Okay, that's legit. And DAX on the daily is up, but there's a threat, not an opportunity. See, this is a threat that the next leg is down in an uptrend. So you don't buy high, you buy low. So you buy on the primary line. This is an estimate. So the bottom line, if you're a bull, the bottom line is the opportunity. So it could just keep going up. And then the angle will change. But it doesn't change the fact that this is a bullish pattern. But based on what has happened before, which isn't what not always what happens in the future, you want to buy a dip. That's all it's saying. And a dip might happen around here. Technically speaking, that would make sense. Will it? Oh, well, nobody knows that. But you should know the fact you're a buyer of a dipper. Buyer of the dip. Take a look at commodities. Anybody here trade gold and oil? Silver? Oil could be Brent, it could be WTI. We have XAU and XAG. You guys like commodities? Or do you prefer watching the commodities and then translating that over to commodity currencies like Aussie dollar, Canadian dollar, Kiwi dollar? Or could be South Africa, could be Mexico, translated into exotics, maybe. Okay, so this is an ABC. Remember, all these are emerging. It's not that it will do this. It's if C holds, then D. Okay, that's all. That's how you'd look at it. It's just kind of telling you we went from a higher high to a lower low, so now expect a lower high, lower low. But then in here, Okay, so this also tells you the real move is on a higher time frame. So the full story, the full and complete story for crude is not on a 15-minute chart. So it could be down on a 15-minute chart, but up on a 4-hour chart, right? And therefore, this ABCD is a three-wave correction in a bullish trend. Could be, I don't know, but that's what it says might be. Okay. Now, this is nice because it kind of puts it in a context here. There's the A, there's the B, there's the C. So if you think this is going to drop, then all right, then you're trading this, and you're going to trade it like a double top, lower high, lower low. Well, what these patterns are suggesting is if C goes down to D, D will put you here, and then here to here is the next wave of that pattern. Okay? Same time frame, just different perspective, where you are in the pattern. So the basic pattern, if you want to keep it basic here, would be if you were a bull, you would look at this as what you believe is going to happen in the future. And this is only outlining this little temporary dip in the matrix. But again, you might disagree with that. You might be a bear. And I totally understand. I'm a bear too, just not for now. I'm currently a bull. I want to be a bear. I think it's too early to be a bear. I don't want to be a bear until July. So I'm, waiting. But if you saw this from a bearish point of view and you saw that as a double top, okay, and now we have this bottom, okay, then yeah, you might sell it here, but I would say this is a trap and break scenario. But I understand, like, if you're a bear, you're going to simply look at the, A was a double top, B is a lower low, so you sell at C. I would say trap and break. And I still, because I'm a bull, currently a bull, wanting to be a bear later, I would expect that if I were me. So remember, these are not signals. This is your technical analyst doing work for you and showing which charts you should look at. So I said reversal patterns and trend patterns, so it's given me those. And it's not giving me the charts that don't have them. 3, 6, 9, 10. So there's 4 assets on 5 time frames, so there's 20 charts. It says only look at these 10. Okay. Brent. Okay. Potential reversal. Oh, careful. Okay. Yeah. 70, right? It came out 2 hours ago at 70.75, and the target is 7. It's only 75 cents. Got chunks of corn bigger than. All right. Silver. Silver. The trend on the 30-minute is down, and it made a lower low. Okay. So you want to sell, what is this, 33.50, 33.48? Okay. If you're also a bear on silver. And boom. That's the next leg. Cool. Oil on the hourly is interesting because, again, in three-wave correction kind of thing, like this is what it's suggesting. So on a higher time frame than, like, let's say 4-hour, this is the pattern. And this is the price action, according to the potential harmonic free drive harmonic pattern. All right. Rising wedge, bullish. So this move that we've had recently is a threat if you're a bull. The pattern is bullish, and it did break down. So the risk today is this if you're a bull. Remember, even if you're a bull and this is a bearish pattern, you should still know the risk is there. Okay, there's your, I guess I should do that in a slightly different color. There's your lowest low. So that's your, we get any lower than that as a bull, you retreat. And you don't like the fact that this pattern looks like we're going to come down and test that. That's not good if you're a bull. Now, if you're a bear, that's what you want to do, is sell the lower high with anticipation of not making a higher high. The difference in opinion is whether you're a bull or a bear. Nonetheless, the support and resistance is the same. So there is definitely a down leg to an up pattern. So it's a threat to bulls. And I do not like the breakout of at an apex to the downside. That's just not good. But you never know. Maybe it's a timing issue. It's only a half an hour chart. So at the end of the day, if it does this, I want to buy a dip and then go, because then it's a failed breakout. Cool. So this was just showing you that it did make a low outside of this pattern, and that could be a threat to bulls. That's all it's alerting you to. It doesn't say sell. It says now is when a bear would sell, so be careful, bulls. And this is it. Like literally, if you're a bear on this, that's your setup. Now, this came out 3 hours ago. When it came out, that wasn't the setup. All it told you 3 hours ago is it made a lower low outside of the rising wedge. Therefore, it would fall to the red zone, rise, and then that would be your sell. And that's exactly what's happened, and that's where we are. So if you're a bear, I would recommend you look at the 30-minute chart on oil. You might have an opportunity forming in the next couple hours. Drop into your 15-minute chart and look for opportunities. Maybe bust out that fib, maybe bust out those daily pivots, but do something. But the thing is, if you're a bear, look at this. It matters. And if you're bull, well, you're already in it. So as long as you don't make a lower low, maybe just maybe you survive. But if it flips here, maybe you just go ahead and take your profit. So it's good for both bulls and bears. Brent, precisely the same thing. That's a sell if you're a bear. Look at that, the drop, and okay, and now you sell the rip if you're a bear. So let me zoom in so you can see that a little bit better. You see? Sell the rip. There's the dip. Then it pops up. Roll reversal, take her down. Oh my God, it's so good. I know. Hourly chart, same. 4-hour chart, this is where we are. 4-hour chart, still technically bullish. Up to 69. All right. That's a 4-hour chart. 4-hour chart. Yeah, baby. And now what? Brent, bullish. Mm-hmm. 13 hours ago, buy a dip. Looks like it retested 71. Nice. 71.02. But it's only 60 cents? That's it? No, not really. Just the next leg. So it's just telling you where the next level of resistance is. But, what you want to be doing is this. And then here's what I think is going to happen in the future. But not yet. Okay, in June. It's an important month. I'm getting a new belly button ring. So I'm ready for the beaches in July. Oh, yeah, it's going to be beautiful. Yeah, it's going to be a Canadian flag made with diamonds. Yeah, and I wear it on my belly button. Can you imagine? And sorry, guys, if you have a belly button ring, you're like, dude, I find that just. I'm just saying I wouldn't look very good with a belly button ring. That's all I'm saying. But who knows? Maybe I would. Yeah, look at that consolidation now for Ripple. So this means down for Ripple. Interesting. Hey, I didn't like it at 16 cents, but maybe I'll love it at $2. It's just funny how the world works, right? Oh, we don't have any signals here. I'm sorry. Yeah. 1 million. Yeah. I don't think I said 1 million, though. I don't think that's me. Uh, uh, yeah. It just doesn't seem like something I'd say. Yeah, actually, yeah. I don't think that was me. I just I make a lot of jokes, but that just doesn't sound like me, even if I was joking. Um, bring down. All right. So there's a short opportunity developing. Oh, is that right? How funny. Uh, well, I guess on what time period, right? One way to maybe justify if I said that, then I said it. Is that at some point the U.S. dollar will collapse. It will. Not this year, not next year, not this decade. But based on past performance of all reserve currencies, there has always been a changing of the guard. It's always related to debt. And the United States is crazy debt. So, anyways, it's going to happen. Not soon, but it will happen. It's inevitable. And that point, the dollar will weaken. Yeah. Gold will stay the same. Gold is gold. An ounce of gold will always be an ounce of gold. So if the value of the dollar goes to zero, gold will go to 1 million. Yeah. So are we going to use RMB? No. Are we going to use euro? No. Are we going to use a digital currency? Maybe. Um, but at some point, maybe dollar isn't important anymore. It's worth less because what if everyone just wanted Bitcoin? Well, then Bitcoin goes to 1 million, right? Um, if nobody wants the dollar, well, then we have a massive shortage of Bitcoin, and the dollar is zero. Hey, I've been places around the world where the currency is not worth much. Traveling through Eastern Europe was great back in the 90s because you saw their currency collapse. but the dollar was a dollar. It was just a bought a lot. Another, I guess, example is the first time I visited Cuba, a dollar bought a lot of Cuban money. Then my second trip to Cuba, my dollar bought a lot more money. Well, in a closed economy, the value of, in this case, Cuban peso doesn't change. It's closed. It doesn't change. It doesn't travel across a border. The value has changed. So the value of the US dollar to Cubans increased significantly in the 6 months that I'd been there from before. So even just in the 6 months, okay. But at that point, could that change? Maybe. Right? So as long as there's a need for a dollar, we'll have a dollar. But if the US debt gets to a point, I mean, we might already be there where it's unsustainable, but at least we're kind of maybe trying to do something about it now, then we preserve it for a while longer, right? But gold could go to 1 million. See, I don't remember saying it in what context I said it, but you'd need a massive increase in the demand for gold on the short run. Sure, but not that dramatically. So then what, you know what I mean? Um, so then it would have to be a decrease in the purchasing power of a US dollar. Okay, that's probably more likely, but still not soon. But if you bought gold 25 years ago, it was $650 and now it's 3,000. Cool. So in another 25 years, okay. So let's say it was 600, 1,200, that's 100%. 1,800, 200%, right? So will gold go up 300 or 400%? Well, that's only 12,000. So something really, really, really dramatic would have to happen to go from 3,000 to 1 million. The value of the dollar would have to, the acceleration of the devaluation of the dollar would have to accelerate dramatically. It's possible, but not likely. So I believe my annual target, conservative target, is right around this price. And at this rate, we expect to get there and beyond. But remember, this isn't predicting the future. It's not even technical analysis. Okay. But you could be a bull still. And that's where then I just wanted to show you. Maybe you're a bull on gold. And so you set it up specifically for you. Only show me gold and only show me trending patterns. Now you have to say, well, you're a bull, so now you only look for bullish opportunities. And right now on gold, there is none. Cool. Hang tight, son. Settle your horses. How many people find that something like this would be helpful? That you're fundamentally bullish, but there's no reliable, repeatable pattern on any time frame on gold that suggests an uptrend or a downtrend. Not in the 15, not on the 30, not on the 60, not on the 240, not on the 1440. So chill out, relax. You can still open the gold chart, but realize it doesn't exist now. But maybe a daily pivot, you take a shot. Maybe. But you want to align yourself with market forces. Market forces could be fundamental. Market forces could be sentimental. I like that, huh? So, reading 100 articles over the last 7 days, the market is positive and almost like very bullish on gold. It hasn't moved in the last 24 hours. But so a buying of a dip is okay. Right now, I can't prove to you whether it's going to dip or not. That's all. So now you can do that and you can be prepared. Okay. So we go to the, gold should be here. Gold, I guess this one. So we had a 7-day projection of just above 3,100. I've had that projection now since the beginning of the year. I literally, and it's on a different chart somewhere, I literally have it drawn like this. So we've known this for months. Yeah. Okay. Cool. And during this drop, which occurred over the course of almost a week, the market stayed bullish. Actually, in here, sentiment went bearish. When you read the articles, they were suddenly bearish because it dropped and then it dropped again. So over the course of a week or two, the sentiment score for gold fell, but the macroeconomic score stayed very, very bullish. And so the only thing that really happened was we came down to the moving average and then went up. And we've had this target since the beginning of the year. And now statistically, the best case scenario is 3,111 by tomorrow. And I think the worst case scenario is to get there in a week. I think somewhere in the middle, of course, is most plausible right now. But since this is a fundamentally based trend, I'll tell you what, that's just a conservative target. The next target really is this. And then the next target is this. Now, would it do it at that rate? Not likely. So how would you figure out the rate of which we would get? In fact, let me update this slightly, make it a little more realistic. What I'm saying is this is the general thought process, and then now you'd have to time it a little bit. And so now you can go to seasonality and see what period of time gold usually rallies and which it usually does not rally, and then try to line those up so that you get to these targets like normality. So I might just say like 3750 by the end of the year, 1212. That could be my general thought. So now I have to line up when I think the market's going to, the market for everything, aggregate market. In particular, I'm thinking stock market. When would the stock market rally and why? I have some theories on that. So if I could line that up, with suddenly aggregate demand is pushing this, not inflation, then gold going up is bullish. Well, at that point, I know what to do when to change the scoring mechanism in our risk gauge from gold going up being bearish, which it is now, to gold going up being bullish. See, it's not whether it's going up or down, it's why it's going up and down. That matters. That's where a lot of people, if not most people, mess up their fundamentals. So, like the market, I don't know, 5 or 6 years ago, they were freaking out on our inverted yield curve, and they're like, that definitely means the stock market's down. Well, if you had listened to them, you didn't get any of the stock market rally. It's because they don't understand. Now, in the book, yes, if you have an econ book, that's what it said. An inverted yield curve predicts a stock market correction, we'll call it. That's true most of the time. And that's what most people do when they go to university. They study economics or finance, and they get, at a good school, they get a C or a B. At a bad school, they get a B or an A. But the thing is, they don't understand the concept. They only have memorized the rule. So if you don't understand the concept, the rule is irrelevant. So when the market, and this was people on TV, and this was articles being written, and this was gurus on YouTube, they're all screaming bloody murder about a inverted yield curve and the pending stock market crash. And I'm like, that's ridiculous, because that's not the context of which why the curve is inverted. You have to know why it's happening, not that it is happening. That's child's play. There's a difference between memorizing the alphabet and writing existential poetry using letters. Oh, but you memorized all the letters in the alphabet. Ah, good for you. Doesn't mean you write good. So, anyways, I sound like I'm getting bitchy, but I got my hoodie on. I should be all comfortable. Oh my God. I think I'll wear a t shirt under this, huh? So happy I have a hoodie, kinda, a blazer hoodie. And I got the pants, like I got the full leisure suit, man. Oh, this is going to be so good. Like a hipster. Yeah. I think I'll get another one. So good. It's so amazing. It looks like wool. It must just be printed or something. I don't know how they do it. It's not cotton. I mean, it's not wool, it's cotton. Like, it's amazing. I'm so happy. Look at that. It looks good. Yeah. Anyways, leisure suits. Who would have thought? Mm-hmm. I guess what I have to do is get white shoes and a white hat with with my leisure suit. No, this one was is definitely a brownish, brown shoes, brown belt, brown hat. Cool. Now I need to go somewhere. Cool. Hey, I'm going to be in New York in April, kind of like the third week of April. Does anyone want to get together, hang out at the Harvard Club, and then go to a cigar bar and get some fancy cocktails? So look at the slope over the 4 hours is down. That drop we had the other day is, yeah. So this is one standard deviation with um, a slope with a negative integer. Doesn't mean, right? On an hourly chart, it says, there might be hope, but it's not that great. Got to hang in there. So we might as well look at this. Bring it across a little bit more. I guess I'll just move my stop a little. Always pick up. Remember, I'm actually a long-term bear, even though I'm long. And this is the second trade long. So I'm still in the first trade. We're testing that cycle level of 67. And then, of course, if I change this, if we do this with traps, and I'll add two moving, and one leading, one leg. Okay, so now we got the same thing. 5-minute chart, plausible double bottom, psychological level. Okay, slope currently is bearish. Okay, on this 5-minute chart, this is bearish. There's no doubt. Moving averages are acting as a cloud cover. The slope of the mean is a negative integer, and one standard deviation above the mean in a downtrend held. So now we get one standard deviation below the mean, near the double bottom, near the cycle level. It's either going to go up or it's not. Okay, a bear thinks this is pretty standard. You're just going to go this and this and this and this. A bull is waiting, like, if this holds, then at some point throughout the day is that. If then. Now this one didn't have a trap on it. I should have a trap. Let's have the trap set for stock market open. It shouldn't be though for oil. Maybe on the default. Right? Okay, that has it. Okay. Yeah, so this was good for bears. This is quite telling. I'm already protected, so it doesn't. If it collapses, that makes a ton of sense, and if it doesn't, it kind of has to do something now. So this is definitely a moment of truth. Let me update you on what's going on in the market, and then I'll see you later at 4 o'clock if you're in my swing trading group, which most of you are. Here's the news update. U.S. dollar is buying oil at a slow pace, Danske Bank.
Oil prices hold steady as fuel drawdown counters strong dollar.
Gold prices retreat from record highs after Fed decision. South African Reserve Bank leaves repo rate unchanged at 7.50% on. The U.S. dollar Swiss franc rises after SNB cuts rates. South Africa SARB interest rate decision meets forecasts 7.5.
Mark Carney will call Canadian election for April 28th. Report. Russia's central bank reserves dollar rose from previous 639.1 B to 641.9 B. Euro US dollar price forecast. Corrective slide to test buyers' determination around 1.0800. Gold attempts to recover ahead of the U.S. trading session in the Fed's aftermath.
Cool. Hey, we have a rebate program to make all of this free for you. I also have a prop style funding. Yes, it's from the Summary of Economic Projections. So if you need money, there might be an opportunity for you. If you just want TRADARS for free, we have an opportunity for you. No, it's inside of TRADARS. Every member of TRADARS has access to my swing trading group. Yes, Santiago. So imagine you have a $200 a month membership. It's possible for you to earn $100 or $200 back every month in cash. I'll PayPal it to you. It's cash, not a credit. Cash. I'll send you the cash. You're welcome. See, I want everybody here to use TRADARS for their market sentiment, their fundamental analysis, technical analysis. I want everyone here to have performance coaching, and I want everybody here to use our execution services so that it either costs you nothing or you actually make money. I want you to have all of this, and it's quote unquote free. Quote unquote. Yeah. Yeah. Cool. This is a way for you to get 20,000 in capital. All right. So that's that. Thank you for being part of my team and allowing me to share resources with you today. Please click the thumbs up button before you leave. Peace on earth. May the pips be with you. May your profits be above average.